Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Auto stocks are typically not stocks that trade at a very big premium to the market. In fact, they often trade at a big discount in the single digits. But one company that's actually doing really well is now trading at a price to earnings multiple under 5. This is, I think, really notable. Often that kind of price to earnings multiple is a sign of trouble, but that's not exactly what we're seeing with General Motors. So I want to highlight exactly what's going on there, what earnings look like, and why I'm very bullish on this company long term. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And if you want a deep dive on GM and their subsidiary Cruise, I will put a link to that in the show notes. That it's going to be worth checking out. So I want to highlight just where the stock is right now and what management is expecting. Let's start there. This is GM's stock price as I'm recording. This is after the market closed on Tuesday, so stock was down about 3.5% today, trading a little bit under $38 per share for a $53 billion market cap. Keep those numbers in mind because as we go over here to, this is their earnings presentation, and what they did here is they updated their guidance, actually increased guidance. I want to highlight this because you would think that a stock that's dropping and is trading for a very low price to earnings multiple is somehow in trouble, but actually operations are getting better. At the midpoint of the adjusted earnings guidance of $7.65 per share, GM shares trade for under 5 times earnings. That's just a really shocking number given how strong results are, given the fact that they're increasing the amount of cash that they're expecting, now $7 to $9 billion from adjusted auto free cash flow. That's up from expectations after the first quarter of $5.5 to $7.5 billion. Margins are really strong, pricing is strong, and management says that they have cut some of their capital expenditures because they're able to make vehicles more efficiently. So just a lot of trends that are moving in the right direction for General Motors. I'll highlight a few of the operating metrics to just show how well the business is doing. This is GM North America. Revenue is up $4.3 billion just sequentially, now $37.2 billion. EBIT adjusted, so basically margins, were really strong, $3.2 billion in EBIT adjusted. Dealer inventory was holding about steady, up just slightly for the quarter. And electric vehicle sales not actually doing that well. So you take this overall, and I think it's a really solid quarter. $3.2 billion in EBIT adjusted, included $700 billion in cash related to a charge for Bolt batteries and some recalls that happened there. So that could have been even better, close to $4 billion without that charge. GM International, also not a huge business, but doing pretty well, $200 million in EBIT adjusted and $4 billion in revenue. GM China, kind of the same story, $8.1 billion in revenue, just a little bit of equity income there, but the number is positive now for the most recent quarter. And Cruise is the other segment that is now being reported, losing about $600 million in the quarter, but that's not a surprise because they're starting to ramp up operations there. Management spent a lot of time on the conference call talking about how they're cutting their spending, not by reducing the scope of what they're doing, but by simplifying vehicle designs, simplifying manufacturing, just being more efficient in what they're doing. And I think this is one of those things where the pressure from Tesla is actually starting to help a company like General Motors. You might remember back in the 1980s and 90s, it was really Toyota that was pushing the industry forward. Now it seems to be Tesla doing that. GM is learning some things, simplifying their design, announced about $1 billion reduction in capital expenditures, also increasing cash flows. One of the notable things is that prices were up about $1,500. That's not something that we saw with a company like Tesla. So prices are up, margins are improving and really strong. They're expecting great results in the second half of the year, even bought back $500 million worth of stock. So I think General Motors is a company that is performing extremely well. There are obviously risks in the auto business, and that has always been the case. But for investors, you're getting a great company at a price to earnings multiple under 5. Management seems to be executing extremely well, and I don't see anything disrupting the core business and the core cash flow from trucks and SUVs at General Motors right now. So I think this is a phenomenal stock. It's one that I own. It's one that I look to add in the near future. The market doesn't seem to like the quarter, but I certainly did. What did you think? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.